Ever feel like you're about to walk into a room full of experts and you're supposed to be one of them?
Yeah, like you wandered into the wrong conference room.
Exactly. Well, today's deep dive is like that crash course you wish you'd had before walking into that room.
We're giving you the cheat codes this time. I like it.
We're tackling day trading, specifically the S&P 500 futures market.
Ah, fast-paced and full of potential. Gotta love futures.
Our guide is an experienced trader from the Inner Circle Trader YouTube channel. We're breaking down one of his videos where he finds multiple trade setups in a single session.
Multiple. Ambitious. Like a chess player thinking several moves ahead.
That's a great way to put it. Now, before we get too deep, some basics. We're talking day trading trades open and closed within the same day, sometimes minutes apart.
Rapid-fire decisions. Definitely not for the faint of heart.
And we're zeroing in on the S&P 500 futures market.
Basically, you're making a bet on where the S&P 500 index will be at a certain point in the future.
Right, and just like the New York Stock Exchange has its morning and afternoon sessions, S&P 500 futures trading has those too.
Those sessions are key. They heavily influence the market's mood and the types of trading opportunities that pop up.
Two trading acts, morning and afternoon. But to really grasp the moves in this market, we got to crack the code, right?
Absolutely, like learning a new language. Liquidity, order blocks. These terms are key.
This trader throws around liquidity a lot. What's he actually mean in day trading?
Okay, picture this. Crowded theater, suddenly there's a fire, everyone's rushing for the exit.
Oh man, total chaos.
Exactly, too many people, not enough space. Liquidity in trading is similar. How easily you can buy or sell without causing huge price swings. High liquidity, lots of buyers and sellers, you can get in and out smoothly. Low liquidity, that's the theater on fire. Things get messy.
So he's really talking about where those exits are in the market where the price might move fast.
You got it. And those exits often revolve around these things called order blocks.
Order blocks.
Think of it like this. Same crowded theater, but now a group's blocked one of the exits. That's your order. Block a bunch of traders with buy or sell orders at basically the same price, creating a wall.
So a bullish order block, everyone's buying, that's support, stops the price from dropping further.
Right on. And a bearish one, everyone's selling. That's resistance, making it tough for the price to climb. Our trader uses these to predict where the market might turn.
Okay, makes sense. He also talks about discount and premium markets. He's not bargain hunting on the S&P, is he?
Not quite. A discount market just means the price is below its recent range or what people think it's worth. Like finding an overlooked gem.
And a premium market would be like, it's gotten too hyped up, maybe overpriced.
You nailed it. Think of that hot new gadget everyone wants. Demand shoots the price up, even if it's not really worth that much yet. Our trader factors all this in.
So it's not just about the price, it's the whole story around it, the liquidity, how everyone's feeling about the S&P 500.
Exactly, and this is where his process gets really interesting. Multiple time frames, he wants the full picture.
He's looking at everything, daily, hourly charts, even down to the 1 minute.
Right, like he's got the market under a microscope. And that's crucial. The daily chart shows you the big trend, but the shorter time frames, like the 5-minute, reveal subtle shifts he uses to time his entries and exits.
And this is all before he even places a trade.
Exactly. This is about preparation, knowing the battlefield before the first shot. Remember, we're trying to think like someone who consistently finds those winning setups.
Which brings us to our trader's analysis of a specific day, the S&P 500 futures chart for a Friday in June 2022.
And not just any Friday. He starts with a bearish bias, meaning he thinks, based on the bigger picture, the market is more likely to head down.
Okay, so charts are up, he's armed with his order block knowledge and a bearish outlook. Time to make some moves.
Showtime. Now we see how he uses all these pieces to build his trading plan.
So Friday's here, charts are up, he's got that bearish outlook. What now?
He's looking for signs, footprints that line up with what he thinks is going to happen.
Like those order blocks we talked about, spots where the market might reverse.
Exactly. He points out a fair value gap above a recent high on the chart. Remember those gaps when prices move too fast?
Like the market took a sudden leap.
Right. Many traders might see that gap and think, time to buy. But he's thinking the opposite. Price went up too quick, might fall back down.
So he's looking to short the market into that gap.
You got it. He actually shows this trade from that Friday, waits for the price to fill the gap, confirming his hunch, then enters a short position.
So he's not just jumping in, he's waiting for a green light.
He's all about confirmation. Multiple things lining up for a higher chance of success. The gap, bearish order block above, and the whole market's feeling bearish anyway.
He even shows his entry and exit points on the chart,
Oh
right?
yeah, the whole shebang. Even how he manages risk, where he take profit and a stop-loss order to limit losses if it goes south.
Gotta protect yourself, even if you're usually right.
Exactly. Managing risk is key. Not about home runs every time. Slow and steady wins the race.
Couldn't agree more. And speaking of long term, this guy seems just as focused on the mental game.
Big time. Patience, discipline, a solid plan. He preaches that stuff.
Which is harder than it sounds when you're watching those numbers bounce around.
Tell me about it. He's clear this isn't get rich quick. It's making smart moves, managing risks, sticking to your plan, even when things get emotional.
He also talks about back testing, which I love. So many traders skip that part.
Right, like a time machine for your strategy. You're testing it out on old data, but no real money involved.
It takes out the emotion, see if it really works in different situations.
Exactly. And he journals too, writes down trades, his thoughts, even how he felt. Learning from wins. Wins 80 losses.
Like a trading diary. Track progress, spot patterns, and how you make decisions.
Nailed it.
Hmm.
And it all comes back to his big thing, developing your unique model.
He says that a lot. What's that mean exactly?
Basically, what works for one person might not for another. You got to find your style, your risk tolerance, setups that click with you.
Not copying someone, but using the tools to build your own path.
Exactly. You're not going to find a one-size-fits-all approach. It's about knowing yourself as a trader, building a strategy that plays to your strengths.
This deep dive has been eye-opening. That unique model thing really sticks with me. Makes you wonder, maybe the real key to winning in trading isn't some secret formula, but knowing yourself just as well as you know the market. That's all the time we have for this deep dive. Until next time, happy trading, everyone.